There are 5 property tax exemptions that every American homeowner over 65 should be claiming right now, but most never do. And every single year they pay thousands of dollars in property taxes they are legally exempt from paying. I am going to walk you through every single one of them, the exact dollar amount each one saves you, which states offer the best programs, and the exact steps you need to take to claim every single one of them. This is not about getting rich. This is about keeping money that is already yours. You worked for decades to pay off your home. You made every mortgage payment. You raised your family under that roof. And now the county is sending you a tax bill that you might not have to pay at all. But here is the catch. They will never tell you about these exemptions unless you ask. In fact, most counties only mention these programs if you specifically call and inquire about them. They do not send letters. They do not make announcements. They just keep collecting until you stop them. Before we get into the specific exemptions, I need you to understand something about how the property tax system actually works. Every year, your county assesses the value of your home. This is different from what you paid for it or what you could sell it for today. The county looks at similar homes in your area, considers recent sales, and assigns a value to your property. Then they apply something called a millage rate, which is basically a percentage of your home's value. On a $300,000 house, a 1% property tax rate means you pay $3,000 per year. Some counties have rates of 2% or even higher, which means you could be paying $6,000 or $7,000 per year on that same $300,000 home. Now here is where it gets important. In many states, seniors over 65 qualify for exemptions that reduce the amount of your home's value that is subject to taxation. Instead of paying taxes on $300,000, you might only pay taxes on $150,000 or $200,000. That cuts your tax bill in half or more, but you have to file the paperwork to claim these exemptions. They do not apply automatically just because you reach a certain age. The county assumes you are paying full price unless you tell them otherwise. Write this down because it is the most important thing you will hear in this video. The county tax office is not going to send you a letter telling you about these programs. They do not profit from telling you about money you could be saving. In fact, higher property tax collections mean more revenue for the county. So if nobody in your family ever asked about senior exemptions, you are probably paying property taxes that you do not have to pay. And that means your children are inheriting a smaller estate because you spent money you did not have to spend. The first exemption on this list is the Homestead exemption for seniors. This is the big one. Most states offer some version of this program, but the amounts and eligibility requirements vary significantly depending on where you live. In Texas, seniors over 65 can claim a $100,000 homestead exemption on their primary residence. That means if your home is valued at $300,000, you only pay taxes on $200,000. On a 2% tax rate, that saves you $2,000 per year. Over 20 years, that is $40,000 you keep in your pocket instead of sending to the county. On a $400,000 home with a $100,000 exemption, you save $6,000 per year. Over 20 years, that is $120,000. Florida offers a similar program for seniors over 65, with exemptions ranging from $50,000 to $75,000, depending on your income level. For seniors with incomes under $30,000, Florida provides an enhanced exemption that can be significantly higher. California has the Property Tax Postponement Program, which allows seniors to postpone paying property taxes until they sell their home or pass away. This is particularly valuable in high-tax California counties, where annual property taxes can exceed $10,000 for modest homes. New York has the Enhanced Star exemption for seniors with incomes under $90,000, which can save up to $700 per year on school taxes alone. For seniors in high-tax New York communities, this can mean $2,000 or $3,000 in annual savings when combined with the basic Star exemption. Ohio offers the Homestead exemption for seniors that can eliminate school taxes entirely for qualifying homeowners with incomes below $33,000. That is potentially $4,000 or $5,000 per year in savings for Ohio seniors who qualify. The key thing to understand about the Homestead exemption is that you have to file it and then refile it on a regular schedule. Every single year, county assessors send out property tax bills assuming you are paying full price. They do not automatically apply senior exemptions. You have to submit the paperwork, and you often have to resubmit it every year or every few years, depending on your state's rules. Some states require annual recertification. Others require it every 3 or 5 years. If you miss a filing deadline, you lose the exemption for that year, and you have to reapply from scratch. Write this down. If you own your home and you are over 65 and you have not filed for a homestead exemption, you are leaving money on the table right now. This is not something you do once and forget about forever. Most states require you to file or refile regularly, and if you miss a year, you lose the exemption until you file again. The window for refiling typically closes on a specific date, often March 31st or April 15th depending on your state. If you miss that window, you pay full taxes for the entire year and you cannot get it back. The second exemption is the school district tax exemption. This one surprises a lot of people because school taxes are often the largest portion of your property tax bill. In many states, seniors over 65 qualify for complete or partial exemptions from school district property taxes, which can be worth thousands of dollars per year. Oklahoma has a program that exempts seniors from school taxes on homes valued up to $100,000. For a senior living in a $200,000 home, this means they only pay school taxes on the first $100,000 of value. If school taxes are $25 per $1,000 of assessed value, that is $2,500 per year in school taxes they do not have to pay. Over 20 years, that is $50,000. For a senior on a fixed income, that is the difference between being comfortable and constantly worrying about money. Here is why this matters so much. School taxes can account for 40% to 60% of your total property tax bill. If you are paying $4,000 per year in property taxes and half of that goes to schools, that is $2,000 per year in school taxes you might not have to pay. Over 20 years, that is $40,000. For a fixed-income senior, that is not pocket change. That is the difference between making it comfortably or struggling to pay the bills every month. Now, I need to be clear about something. Not all states offer school tax exemptions for seniors. Some states prohibit them by law because they say it unfairly shifts the tax burden to younger homeowners and renters who do not own property. But many states do offer them, and the amounts and eligibility requirements vary widely. That is why I said earlier to search the name of each exemption plus your state. What applies in Ohio might not apply in California. What applies in Florida might not apply in Texas. You have to check your own state's rules by calling your county assessor's office or visiting their website. The third exemption on this list is the Property Tax Freeze Program. This is the one that saves the most money over time, and it is the one most seniors never hear about until it is too late. Several states offer programs where your property taxes are frozen at a specific amount once you reach a certain age, and they never increase no matter how much your home value goes up over the years. Florida has the Save Our Homes program, which caps the annual increase in assessed value for homestead properties at 3% or the inflation rate, whichever is lower. This does not eliminate property taxes, but it prevents your taxes from skyrocketing as your home value increases. For seniors who have lived in their homes for 20 or 30 years, this can mean paying taxes on a home assessed at $150,000, while their neighbor's similar home is assessed at $400,000 because the neighbor just bought it. The tax bill difference could be $3,000 or $4,000 per year. That neighbor is paying property taxes on a $400,000 value while you are paying taxes on a $150,000 value on the same street in the same house style. Texas has the school tax limitation for homeowners age 65 or older. Once you claim this exemption, your school taxes are frozen at the amount you were paying when you filed. They cannot increase as long as you own the home and continue to use it as your primary residence. This means a senior who has been in their home for decades could be paying school taxes on a $150,000 assessment, while new homeowners next door pay taxes on $350,000 assessments. That is $4,000 per year in savings just from the school tax freeze alone. This is critical. The property tax freeze only applies if you file for it before your taxes start climbing. You cannot go back and claim it after your taxes have already increased. You have to file before the increase happens, and then you lock in the rate permanently. This is why I keep saying the time to act is now. Every year you do not file is a year your taxes continue to climb, and once they climb, you cannot go back down. The exemption freezes your tax rate going forward, but it does not retroactively reduce taxes you already paid. Let me give you a real example. In Texas, a senior homeowner files for the 65 and older school tax limitation when their home is assessed at $200,000 and they are paying $3,000 per year in school taxes. 10 years later, similar homes in their neighborhood are assessed at $400,000, and new homeowners are paying $6,000 per year in school taxes. But this senior is still paying $3,000 per year because their taxes are frozen. Over 20 years, that senior saves $60,000 compared to what they would have paid without the exemption. Meanwhile, Their neighbors pay double every single year. The fourth exemption is the income-based property tax credit. Several states offer programs where seniors with lower incomes can claim credits against their property taxes. These programs are designed to help seniors on fixed incomes who might struggle to pay rising property taxes as their expenses increase and their income stays flat. Michigan offers the Homestead property tax credit for homeowners with household incomes under $50,000. Eligible seniors can receive credits of up to 60% of their property taxes paid, depending on their income level. For a senior paying $3,000 per year in property taxes with an income of $30,000, they could receive a credit of $1,800, cutting their actual tax bill in half. Wisconsin has a similar program called the Homestead credit, which can refund up to $1,560 per year for low-income homeowners. New Jersey offers the property tax deduction for seniors with incomes under $100,000. This allows qualifying seniors to deduct up to $10,000 of their property taxes from their income when calculating their state tax liability. For a senior in the 22% tax bracket, that could mean $2,200 in state income tax savings, which is essentially the same as paying $2,200 less in property taxes. Massachusetts has a circuit breaker tax credit that works similarly for seniors with high property taxes relative to their income. These income-based programs are important because they provide additional relief for seniors who need it most. Even if you already filed for a homestead exemption, you might also qualify for an income-based credit. The two programs can stack, meaning you could save even more money. But again, you have to file for them. You have to submit the paperwork and prove your income qualifies for the program. The fifth and final exemption is the local option exemption. These are programs offered by individual counties or municipalities, and they vary widely depending on where you live. Some counties offer senior exemptions that their neighboring counties do not offer. Some cities have special programs that only apply within city limits. Some school districts offer their own programs separate from what the state requires. Cook County, Illinois offers additional homestead exemptions for senior homeowners that go beyond what the state requires. Chicago homeowners over 65 can qualify for exemptions that reduce their tax bills by hundreds or even thousands of dollars per year. New York City has its own senior property tax exemption program that is separate from the state program, with benefits that can exceed what New York State offers in other counties. San Francisco offers special exemptions for longtime homeowners that can significantly reduce their tax burden compared to newer homeowners in the same city. Here is what you need to do. Call your county assessor's office and ask specifically about senior property tax exemptions. Do not ask about general exemptions. Ask specifically about programs for seniors and homeowners over 65. Tell them you are a homeowner over 65 and you want to know every exemption you might qualify for. Write down the names of each program, the eligibility requirements, the maximum savings, and the filing process. Ask about both state programs and local programs that might be unique to your county. Do not hang up until you have this information written down. Most people never make this call. They just pay whatever shows up on their tax bill. But you can pick up the phone right now, and in 20 minutes, you could find out you are entitled to exemptions that save you $2,000 or $3,000 per year. That is $50,000 or $75,000 over a 20-year retirement. For a fixed-income senior, that is not pocket change. That is the difference between being comfortable and being broke. That is the difference between leaving an inheritance for your children and leaving them nothing. Let me give you the specific numbers now so you understand exactly how much is at stake. According to the American Society of Appraisers, the average annual property tax bill for American homeowners is approximately $3,000. For seniors over 65 who own their homes outright, that number is often higher because they tend to live in older homes with higher tax rates, and they have been in those homes long enough to see their values climb significantly. If you qualify for a $100,000 homestead exemption on a $300,000 home in a county with a 2% tax rate, your annual savings could be $2,000 per year. Over 20 years, that is $40,000. If you also qualify for a school tax exemption that eliminates another $1,500 per year, your total savings could be $70,000 over 20 years. If your county offers a local option senior exemption worth another $500 per year, you are at $80,000 saved over 2 decades. And if you file for an income-based credit worth $1,000 per year, you could be saving $100,000 or more over a 20-year retirement. For seniors on fixed incomes, these numbers matter enormously. Social Security benefits average around $1,900 per month for retirees. If your property taxes are $300 per month, that is 15% of your income going to the county. If you could cut that in half through exemptions, you would have an extra $150 per month for medical bills, groceries, prescription medications, or leaving more to your children. That $150 per month is $1,800 per year. Over 20 years, that is $36,000 of additional spending power or inheritance. The mistake most seniors make is assuming their property taxes are fixed. They think the bill they receive is the bill they have to pay. They see the number and they just pay it because they do not know any other option. But property taxes are not fixed. They are negotiable through these exemptions. You just have to know the system exists and you have to file the paperwork to claim what is legally yours. Now, I want to walk you through the filing process because I know that sounds intimidating. How do you actually file for these exemptions? Who do you call? What paperwork do you need? The good news is it is not complicated. In most states, you can file online through your county assessor's website. You will need to provide proof of age, proof that the property is your primary residence, and in some cases, proof of income. The whole process takes about 30 minutes the first time, and then you might have to refile every few years depending on your state's rules. Here is what you do. Go to your county assessor's website and search for senior exemptions. Look for the Homestead exemption application or the senior property tax exemption form. Download it or fill it out online if your county offers digital filing. Submit proof of age, which is usually a copy of your driver's license or birth certificate. Submit proof that you live in the home, which is usually a utility bill or voter registration card showing your address. If your state requires income documentation for income-based credits, have your most recent tax return ready. Some counties also want a copy of your deed or previous tax bills to verify ownership. Once you file, the exemption typically takes effect on your next tax bill. Some states apply it immediately, while others wait until the next assessment cycle, which might be January 1st of the following year. Either way, you will start saving money within a few months of filing. The county will send you a confirmation letter telling you what exemptions you qualified for and how much your taxes are being reduced. Let me address a common concern that I hear from seniors all the time. Some seniors worry that filing for these exemptions could affect other benefits they receive. For example, if you claim a property tax exemption, could that affect your eligibility for Medicaid or Social Security? Could it increase your Medicare premiums or reduce your SNAP benefits? The answer is generally no. These exemptions are based on property ownership and age, not income in most cases. And even the income-based credits typically do not count as income for purposes of other government programs. But if you are concerned, call your county assessor's office and ask specifically about any interactions with other benefits. They can tell you whether claiming a particular exemption affects any other benefits you receive. Let me also address another common concern. Some seniors worry that filing for these exemptions will trigger some kind of audit or investigation into their finances. This is not how it works. These are legal exemptions that state governments have established specifically for seniors. Filing for them is completely legal and entirely appropriate if you qualify. There is nothing wrong or suspicious about claiming a benefit that the state has explicitly created for people in your situation. Now, let me give you 5 steps to take this week. These steps will cost you maybe 2 hours of your time, and they could save you thousands of dollars over the coming years and decades. First, call your county assessor's office. This is the single most important step. Do not send an email. Do not go online and fill out a contact form. Pick up the phone and call them directly. Ask specifically about senior property tax exemptions. Tell them you are a homeowner over 65 and you want to know every program you might qualify for. Write down the name of each program, the eligibility requirements, the maximum savings amount, and the filing deadline. Do not hang up until you have this information written down in front of you. Second, go to your county assessor's website and find the application forms for each exemption you might qualify for. Download them or note what information you will need to file. Many counties now have online filing systems that make this process very simple. You can often complete the entire application in 20 or 30 minutes from your computer. If you do not have a computer or are not comfortable using the internet, ask a family member to help you or call the county office and ask if they can mail you a paper application. Third, gather your documents. You will need proof of age like a driver's license or birth certificate. You will need proof of residence like a utility bill or voter registration card showing your current address. If you are applying for income-based credits, you will need your most recent tax return and possibly bank statements showing your income for the year. Have these ready so you can file quickly without having to search for documents. Fourth, File for the exemptions. This takes about 30 minutes per exemption. If you qualify for 3 different programs, that is 90 minutes of your time. But once you file, you could be saving $2,000 or $3,000 per year for as long as you own your home and continue to qualify. That is one of the best returns on your time investment you will ever make. That 90 minutes could be worth $60,000 over 20 years. Fifth, set a reminder on your calendar to refile each year or every few years as required by your state. Many seniors lose their exemptions because they forget to refile when a deadline passes. Put a reminder in your phone or write it on your calendar so you do not miss the deadline and lose months or years of savings. Some counties will send you a reminder postcard, but many do not. You are responsible for knowing when to refile. The best thing you can do right now is call one family member and tell them about these exemptions. If you have a neighbor who is a senior homeowner, call them and share this information. Most seniors over 65 have no idea these programs exist. They are paying full property taxes when they could be paying nothing or a fraction of what they owe. A 5-minute phone call could save your family thousands of dollars. Send this video to your children or grandchildren and ask them to check whether their grandparents have filed for these exemptions. Many adult children do not know about these programs either, and they could be costing their parents tens of thousands of dollars by not helping them file. This is one of those situations where knowledge truly is power, and sharing that knowledge can change your family's financial future. If you are not subscribed yet, do that right now, and hit the bell so you get notified when I post new videos. Property tax rules change every year as states add new exemptions, modify existing programs, or in some cases eliminate benefits. When these changes happen, I break down exactly what they mean for your specific situation and your home. That is what this channel is here for. We are here to tell you about the documents and exemptions that the system does not want you to know about. Do not put this off until next month. Do not tell yourself you will do it later when you have more time. Call your county assessor's office today. Find out what you qualify for. File the paperwork while you are still healthy enough to handle it. The savings start the moment your exemption is approved, and every month you wait is money you are leaving on the table. You earned your home. You paid off your mortgage. You raised your family under that roof. Do not let the system take money that is legally yours just because nobody told you about these exemptions. You have worked too hard and waited too long to leave this money on the table. The time to act is right. No,